There's analytics done. There was a book I read. It talked about 1,000 predictions from financial experts versus the computer picking random predictions, and the financial experts were only 4% more right
No
than
kidding.
the computer randomly selecting 50-50, yes, bad, good, right? So if you're right, you puff your chest out. If you're wrong, there's no accountability.
What's up, everybody? Welcome to the Ultimate Real Estate Lifestyle Podcast. I am your host, Guy Bouchard, and today we have our guest, Romik Yeghnazary. Romik is the founder and CEO of Lending Arena, who opened his business in 2017, is a diversified lending outfit that pretty much does it all, if I understand correctly, and has done
Yes.
almost $1 billion of lending, and that is no small potatoes in the business we're in, as we know. And we're gonna really deep dive into what Romik has done with his business and how he serves investors across the board, doing what they do best and what we do best, which is invest into real estate. So, Romik, welcome. Thank you very much for coming on board today.
Yeah, thank you. Thanks for having me. Appreciate it.
Yeah, it's my pleasure. And our discussion before was just about adding value, and that's what this is
Hmm.
all about. And so, we've done our intro call, and that is to make sure that
Yeah,
there's a connection and there's some synergy on what it is that we're doing this for. And we've connected on that level about helping people and continuing to grow our portfolios and grow our business and be in the space that we love being in. And you're based out of Las Vegas, Nevada, which means that you're kind of in the epicenter of the action. So I bet you see a lot of stuff in the lending world. And so
yeah,
why don't you give our viewers just a little bit of insight, background into sort of
sure.
what you're doing and why you're doing it.
Sure. For my kids, I removed the H in my last name just so it's easier to pronounce. I think it's the H that throws people off. So, and
You
then I
know,
regretted it afterwards. I'm like, I shouldn't have done it, but
I've got
nevertheless,
an H in my name, and I'll be honest, it does throw the people off as well. That is the part
they're
that
like,
they.
yeg, and then it slows down. It's like a little speed bump, and then it just continues from there. I don't like speed bumps. Yeah. Anyway, yeah. So, just a little bit of background. I've been originating home loans for 21 years. In Las Vegas, I started in Las Vegas, and in 2017, we opened up Lending Arena as a company, and um, you know, really, I would say our biggest strength is the team that we have is in essence. The team that we have has been together for 17 years. We're a family operation. So there's a lot of experience behind, and even
So well,
before
well before you
17,
founded the company.
yeah, and the people that are in there some of them were already in mortgages for many years before that. So, um, yeah, we've been together for a long time. We were always operating together, and I just branched off to kind of run my own ship, be able to establish my own company, and bring on the banks that I always wanted, and have the flexibility you have as basically a company owner versus working for a brokerage. So, and that just entailed, honestly, it was just for my own production and my own clients and everything. It wasn't really meant like a traditional brokerage where we go out and we hire on individual loan officers and grow similar to how a real estate company grows where they hire on real estate agents. I never really wanted that because once you have a few people, you're left with really managing people, and I never wanted to do that. I just wanted to produce and do good loans and own the company so I can offer more to the client. And I did that. I did that for a couple years, and then we started branching out in various ways. But we do loans, to go back to what you were mentioning, in all avenues. I like to categorize loans in, I would say, four tiers. Tier one is your traditional conventional VA, FHA type loans. Obviously, those are done by anybody that does home loans, right? Consumer loans, right?
Yeah.
And then we also do a lot of tier two loans. Tier two loans are the non-QM, standing for basically non-qualified mortgages, right? Everything outside of the box of Fannie Mae, Freddie Mac. Usually Fannie Mae, Freddie Mac guidelines, and that box is tier one. Everyone plays in that space. Chase, Wells Fargo, every lender that does consumer loans. outside of the box of Fannie Freddie is non-QM. They don't go off the guidelines of Fannie Freddie, although some of the guidelines are kind of similar. They have make their own rules with their own investors. These are loans that are basically for people that can't qualify the traditional way and don't want to show tax returns and income documents in general. For usually self-employed borrowers, but I mean, we have W-2 employees that are going through there as well. If you don't qualify full doc, meaning if you don't qualify with all your documents, then you go non-QM. So we have a lot of various loans in that space that could be
Now
done.
we're in my space, well, my space
Yeah.
in Canada, which is where I focus most
Yes.
of my business. We call those A and B lenders. That's how we differentiate. Is that like A lenders
Okay.
are the typical qualifications, standard qualifications. You meet all the
Yes.
requirements. If you don't fit that box, you're into B lender territory, and
Correct.
then beyond that, you're going to talk about, I'm sure. But is that, do you hear that in your terminology? Is that, or you tier one, tier two? That's the common language that you guys use.
People don't even use tier one, tier two. They just say non-QM or
Okay,
regular loan. But for me, I just categorize them as such. And
gotcha.
you can A, B loans. Yeah, I mean it makes sense. I mean it's similar in Canada.
Yeah,
Beyond that, you have tier three, which is basically private loans,
yeah, that's
right?
right.
So hard money loans, private loans. There's different names for it, but basically those are more equity based, less guideline based, right? So if you have someone that doesn't fit one or two, or they need to close something in 5 days, I just got a phone call 30 minutes ago, 40 minutes ago. They have to close by December 31st. And, we're like, okay, we'll do it,
Wow.
so we'll be able to fund that. Private's used for that. I've had agents call me and needed funding in 2 days. We control our own money there on the private side. For the most part, we have investors as well. If there's someone that wants to put money in and make a 10, 11, 12% return, we're open to having a discussion. Then tier four is, which we've been doing for about a year and a half now, is commercial financing, a lot of commercial financing. This is commercial private and commercial agency and just commercial in general. I mean, from shopping centers to office buildings to gas stations, RV parks. We have a warehouse. We were trying to fund an island off the Florida Keys last month. Didn't work out, but it was close. And various
Now,
other very
does
unique
multifamily fall into
property
that
types.
category for you?
Oh yeah, oh
Yeah.
yeah, yeah. We're working on 100 unit in Chicago right now. We just started working on a 250 unit as well in Chicago. So yeah, absolutely. Yeah,
And do
multifamily is
you
the easier one of all of them.
Yeah, well, and that's clearly my space, and that's a lot of what we're dealing with, and we have been in other
Yeah.
categories. But as everybody knows,
Mhm.
in that you've been in this space for a minute, lending is the
Yeah.
most critical part of most stuff. Unless you're a cash buyer, which we are for certain circumstances as
Mhm.
well. But
Mhm.
typically, cash buying isn't the best use of your cash. You're always trying to leverage the bank money however you can
Right.
to increase your returns and get creative in whatever way. And what really
Mhm.
intrigued me
Mhm.
about our initial conversation was learning how diversified you were in the space and the creative approach that you do take to kind of serve all levels. Like, you're not just a one size fits all. And when I'm dealing with my clients and most of the people that I work with, and even on a lot of the deals I'm doing, that's a very, very hard thing to find. And what do you think you find your clients find valuable about you? What is the most valuable thing that you deliver to your clients that keeps them coming back on a regular basis?
I would say, our team is just very good with communicating with people. That's one some things that lenders miss. They're kind of doing their own thing. Their communication's kind of spotty. So a lot of the compliments we get is on our communication. Of course, we have the experience, which the initial call we deliver. We're able to answer all the questions and give the client the confidence they need to know, okay, we're in the right hands, right? But also then once you start the process, the communication is really good. We'll let you know what we need. You'll email us, we'll reply. We're fast on text message. We have a lot of people on the front end, so it's myself. We have a head loan officer. We have a production manager that you're in communication with three people. So if someone's on vacation or someone's not, there's three people that are engaged in a group text message usually. So Yeah, it's just being transparent. And also another thing is we don't sugarcoat stuff. If we can't do it, we'll let you know up front. And so it's kind of, if there's an issue, we'll let you know right away. There's just
That's
some
phenomenal.
really basic stuff that I hear, like these are like, for us, for me, this is like really basic, but these are just things that I hear from people that go other places, that I hear complaints all the time from agents and other people. And I'm like, okay, I guess we have that and they appreciate it. It doesn't take a lot to keep someone honestly happy. They want to know that they're working with someone that has experience and that communication is flowing, so
And that you're there when
it's
they
not
need
that
them.
difficult. Yeah.
And
Yeah.
your ability to fund deals quickly is obviously a big advantage. I mean, everything we do in our space, we don't have the luxury of time. We got to act quickly. We find deals that need to be closed on. We have situations that
Yeah.
are constantly changing and moving parts. And you're hitting on the communication piece, which is an important part, which is really hard to find that solid path of communication for someone that's always going to be there and be reliable and not get
Yeah.
blanked whenever, usually when something goes wrong with your application, that's when you start hearing crickets, right? It's like, oh, something's wrong, or the brokers or whoever's involved, or they find it to be a little bit of a disturbance, and now it's hard. Now you go to the bottom of the pile and you don't hear back, and that's one of the most
Yeah.
frustrating things you can deal with, just the not knowing factor. So I can totally appreciate
Yeah.
direct line of communication and just cutting straight to the point. So that's
Yeah.
obviously it is an under couldn't be more overstated how important that is. What's
Yeah. Absolutely.
So I do want to ask you more about the business. I do want to dig into it, but I also you're a family man. So let's
Mhm.
talk a little bit on the personal side here. So you have a wife and kids, right? Tell me a little bit about your family and the personal side of your life.
Yeah, sure. Just going back, way back, I moved to Las Vegas back in 2001 from California, and met my wife here in Vegas. She had moved here around the same time from New York. So yeah, we've been together for 20 years, but I have a 2-year-old, 7-year-old. Actually, a 7-year-old. We're celebrating a birthday today. Wife's got a party bus coming to the house like in a few hours with a bunch of kids and stuff. So, but yeah, no,
Where are you going on the party bus?
we're gonna go to this jumping place. It's like this. It's like a
Oh
trampoline jumping place with a bunch of other like
yeah,
slides and stuff like that, where the kids can just get all their 7-year-old energies out.
totally. Yeah,
They're so
burn that
hyper.
cake off.
Yeah, so yeah, exactly. So yeah, we're gonna be doing that. Yeah, my family's here. My parents are here. My brother Ronnie, I work with. He's the production manager. I've been working with him for a very long time. This is a funny story how he started working with me. When he was in his teens, he took some cash. It was highly against his personality, but I guess he had a sure thing a bet. He bet soccer on Brazil. Brazil, back when Brazil was just killing it, right? And he took like some money from me and he placed a bet and Brazil lost. And he's like, I gotta talk to you. So he pulled me, I met him and he's like, I'm sorry, I thought they were gonna win. And so I'm like, all right, that's fine. It's not a problem. You come work it off.
Yeah,
So he's been with me ever since.
he's been working very out. That's quite the debt. He must have found
He's
quite the
been
debt.
working it off for like 15 years. So yeah, so we're very close. We grew up playing a lot of tennis up and down Southern California. We were trying to go become professional tennis players.
Awesome.
But then I hit college. I was a biology major. I was going to go to dental school. I finished all my undergrad stuff and was actually studying for my DATs to get in dental school. And
Wow.
my side job, helping my mom in real estate, kind of I segued into doing loans. I was like, hey, I'm coaching tennis and I'm helping my mom on the transactional stuff in real estate to pay my way through college and all that stuff. I said, why don't I just get my loan license? And at the time, all you had to do was go get fingerprinting done and they gave you a license. You had no idea what to do. You're just like, okay, I have a loan license now. I have no idea what to do. So, I learned, and slowly I was like, you know what? I remember one day I was studying for a microbiology course and
Yeah.
I closed the book. I'm like, I don't want to do this anymore. I'm just going to go out and just
Okay.
work on making money and doing home loans and that kind of stuff. So that's how it kind of happened. That's kind of how life works. I'm finding out.
So it totally is, and I mean, you follow your passion. We all always think we're on a path, and whatever draws us
Yeah.
and whatever gets us excited every day. So what did your mom do in real estate? So you said you were helping her out. What kind of influence was that?
Well, she was an agent. Yeah, she was a real estate
Okay.
agent, back then when she got licensed. We had a lot of, my parents, they from coming from Iran, they had a great business there. The revolution happened, it tore them down. Went to California with nothing. My dad built a mechanic shop from scratch again, did really well, and we were doing really well in California. Then we got hit with the stock market crash in 2000, pretty hard.
Yeah.
So they had to start over again.
Wow.
And then when they moved to Vegas, we got heavily into real estate. My mom got her license and she was doing really well. My dad opened up another mechanic shop in Nevada. And my mom started doing really well in real estate, selling a lot of properties and stuff, and also invested heavily from 2000 to 2006 in real estate. Lots of money dumping into buying homes. And then in 2007, all of that crashed. They lost everything again. But yeah, I've seen my parents go through it a few times, but yeah, that's how I got into it. My mom, if it wasn't for my mom
No
doing
kidding.
real estate, I probably wouldn't be doing home loans right now. I'd be a dentist.
Man, I think one of the most, yeah, you'd be a dentist right now, or something to do with biology.
Yeah.
Yeah, that's
Yeah.
that's that's crazy. Well, you know, you're some of the battle scars that we go through in life, man, like those are where the real lessons are. And as unfortunate it is to watch your parents go through that, I can't imagine what kind of strength that
Yeah.
gave you and the battle scars that it gave you to learn the resilience of bouncing back from nothing. I mean, that's pretty awesome for your parents. Kudos to them,
Yeah. It
and gives you some
gives you
courage.
some positives and negatives. Yeah, I mean, you see it, and sometimes you're a little too cautious in investing after that, because you're like you've seen it go bad so many times. But yeah, absolutely, 100%.
No,
I agree.
and we see things go bad all the times. I mean, that's a lender's job, is to assess that stuff, and is to make sure that you're protecting your downside and not getting too overzealous
Yep.
or believe too much of the story that's being told to you. But when you've got those battle scars, it also gives you the ability to navigate through this stuff so that you can tend to do a little bit more because you understand what the risks are, and you're not just
Yes.
being too conservative that you're killing deals too, because there's also that side of it
Correct.
where it's just it doesn't check every box, and like, oh, that doesn't fit the box. Whereas someone with experience can say, yeah, you can play with that a
You
little
can
bit.
do it.
Might not check
You see
this.
opportunity.
You
Hmm.
see, exactly.
A
Thank
lot of
you.
the deals we do are like that, and people are passing on stuff, and we're like, "That's good. We could do that." And we always get into new spaces. Like the other day, we got into server farms are big now.
Big time.
So
Yeah.
people are buying server farms, and there's a client that wants to buy a server farm. They're going to put 50% up, and we have to fund the other 50%. And then in 3 months, they're gonna, after they buy all the equipment, it's all going to be set up. Once it's all set up, they're going to pay for the other 50. That's something new for us, but we're
Yeah.
gonna we're gonna be digging into it. So just a lot of really weird stuff. But the key is, not to say no. And if you do say no, keep pursuing it until you find it, so that the next time it comes, you can do it. But and to go back to your multifamily, I mean, that's pretty in the box for us, and those are easier per se. They don't require so much in essence. Like for example, that warehouse I was mentioning before, it's a marijuana facility,
Yeah.
right? They're growing legal marijuana in there, and that's tough. Nobody wants to lend on that, but we have an outlet. We have an outlet. The deal
Yeah.
makes sense. We have an outlet. Most people will be like, absolutely not, right? So it's just stuff like that. I mean, honestly, I never thought I'd be in commercial real estate, 5 years ago, but here we are, just chasing and never giving up on trying to get a deal to work ends up getting you to find different banks and different solutions for people.
It's totally it. We go through that. I mean, everybody I work with, and myself included, we go through that grind every single day. And if it doesn't work, you got to find that path, and you got to continue finding a way, because there's just no such thing as giving up in the entrepreneur world, right? We give up, we
Yeah.
die. Our business
Yep.
dies, we run out of juice. And a lot of the
Yep.
stuff I do focus on, just for a little bit of background, a lot of my stuff is value add. Like, that's where my focus is. And I love unlocking opportunities. I love
Hmm.
finding opportunities, creative financing structures, but really it's distressed properties that people have let go. It's gotten too far gone. There's poor management. There's easy tweaks, but you can step in and you can find those opportunities, and they are everywhere in every space. But our specialty has really been in that in the multi, because like you kind of you everybody knows it. Lending is good, but you have to have the team, you have to have the systems, you have to have the experience, and when you have a plan, you can just rinse and repeat and execute that. So I'm sure you love that stuff, but there's
Yeah.
also
Yeah. Have you ever done any deals or seen any deals in the creative space where the seller carries a second note after closing?
absolutely. Yeah, yeah,
Yeah.
there's,
Okay.
I was gonna kind of ask you the same thing if you
Hmm.
do get involved in that, but I've done deals that are, 100% finance. We do creative take backs where they're just doing a portion, and yes, maybe they're leaving a little bit into it. So there's all different types of that, but I've absolutely done some deals where the sellers left some money in it and carried the second or
Yeah.
carried a note on it.
Yeah. Yeah. We've done a lot of those kinds of deals. I would just say, at the end of the day, if the lender closes, you close a second afterwards. You have to take a second out after the first closes. You know what I mean?
That's right.
Then you're not in any gray area. At the end of the day, no lender can limit you or your ability to take out a second mortgage on a property, right?
Absolutely.
Some lenders will be okay to a certain point, but they always want to see some skin in the game, you
Yeah.
know. But it's better just to keep the two transactions totally separate, and it works. Yeah, we got into that about three and a half, about 3 years ago, I would say, where we first started. And honestly, it was kind of when you're dealing with residential, I was kind of the one in there, you know, because things can go wrong. There's too many people that are working on it, and some half the people don't know what they're doing. So we had to kind of get in there, not only fund the loan, but kind of be like, hey, you need to do it this way and that way, and then keep
Give them a
track of
plan.
everyone. So yeah, I mean, you just got to keep the transactions separate, and that way you're not breaking any laws on the lending side, and you're not everything's cool, as far as the
Absolutely.
guidelines and stuff. But yeah, those are definitely amazing deals. I mean, if you can get in with zero money out of pocket or some money in your pocket to at least start the operating account, because you're going
Yeah,
to need to push some money into the operating account, it's always good. I mean,
for sure.
even if it doesn't cash flow at all, if it just
That's right.
covers 90%, you have a self liquidating debt, 90% of which someone else is paying for you. I mean, that's how you build wealth. I mean, yes, it's not going to really be for you. It's going to be for the next generation, honestly, because it's a slow play. But occasionally you'll find, I mean, in the ones that you're talking about, distressed properties and improving those, you'll find more cash flow type of
That's right.
scenario, which is what I think you're doing, right?
Yeah. Yeah, I mean, that's what the ultimate real estate lifestyle is. You have your assets paying you cash flow dividends every day for you to
Yeah.
decide what you do with your time. So cash flow is a big, big
Yes.
component. We buy income
Yes.
generating assets. And I mean, I've cut my teeth on development over the past 5 years in Canada. And that's
Nice.
been, man, that's been a slug. And that was just, that was a wrong turn in 2000s. Not only because it wasn't something you wanted to pursue, but you want to talk about generational wealth. That's really the long play. Like you're putting all your
Yeah.
eggs in the basket. There's smaller margins on construction, especially rentals, and then you're holding it for the long term. And there's not a
Your
lot of
kids
juice.
will enjoy it.
The kids will have a damn good time with that, and that just doesn't that doesn't cut it for me or the most of the people that I hang with. We want to enjoy
Yeah.
it now too, right?
Someone's got to do it.
Yeah,
I'm the guy. So,
that's it, man.
uh,
So we also had some connection in Canada. So do you have some family in Eastern Canada, correct?
yeah. Yeah. When we left from Iran, and as refugees, we went to Germany because of the war and everything. From there, my dad's side of the family, because of somebody they knew in Canada, kind of went to Canada, and my mom's side and us, we went to California. So yeah, that's how I know it kind of split off. So my father's side is there, so I
Okay.
visited a few times. It's a cool place,
Okay.
cold.
Well, and then you're talking Eastern Canada, which yeah, there's a lot of coldness. I was born in Calgary, Alberta, but I've been in Vancouver area my entire pretty much my
Nice.
life on and off. But my home right now is on Vancouver Island. So we've
Oh,
got the
very
best
cool.
best as far as weather goes in Canada, and
Yeah.
it's a pretty awesome place to rest your hat at night. But as far as business, I think everybody's pretty tired up there. There's a lot of economics that have changed, where the winds have changed, and money's just not there, man. The legislation is really tight. The lending options are not nearly as vast as they are in the United States. We've only got about
How does it
five.
work over there? Yeah, how does it work lending wise? Is it what's the main difference you would say based on
I
what you've found so far?
I would the main difference is options. That's a big one, right? Like, we've got five major banks in Canada. So you talk about
Hmm.
A lenders, we've got five major banks. And then once you're
Wow.
outside of that, like, then you're into B lending. And of course, the market opens up in the B lending space. But the legislations are very tight. It's very difficult to get lending. They really restrict you on the residential side. They have put in a lot of legislation over the past 10 years to prevent people from actually owning more than 3 to 5 homes in their name. And even then, it's extreme.
Really?
Yeah, absolutely. Yeah. They penalize you for owning too many homes up there, and then they really start to use it against you. And
Like
then the cost.
communism, semi.
What's that?
The semi-communism. How do you
I
stop
really,
someone
I
from
really
buying
don't,
more houses?
really don't like. I wouldn't even ask you about it, because you know a hell of a lot more about that than I do. But
Mm.
it's the experience there is just not. It's just not good.
Yeah, the government's good for certain things, but then they start crossing a line and now they're like, now they're no good anymore, Like
They're
what they
not.
did with COVID over there was absolutely insane,
Yeah. Yeah, and
you
it,
know?
and ever since then, there was cheap money, as everybody got, but since then, it's really gotten rocky. And then you talk about cash flow. So really, at the end of the day, the legislation is very, very difficult. Like, the requirements on the lending are very stringent, and then you pair that up with really, really high prices, and you've
Yes.
got, you're buying 4 or 5
Boom.
cap rates. Like, that's what you got available. And you talk about having
Yeah.
to spend your entire life building wealth. It's tenfold there than it is in the U.S. So
Yeah.
biggest difference for me that I've seen over the last, 15 years of kind of being in the US market with my network and looking at things and doing business in Canada, it's the options. It's the options that are
Yeah.
available to you at the price points that you can get them at. And if I would have
Yes.
applied my my work ethic and my time and my effort the same that I did in the United States, I wouldn't have bought and renovated hundreds of units in one of the most expensive markets in the country. I would have been doing thousands and thousands of units in the United States all across the board, right?
Yes.
And all of which would have been cash flowing a lot more and all that kind of stuff. So it's a
Yeah.
big, big reason. Even why I'm in Belize here, like, it's really about the legislation. I want to be in markets where they want business. And that's the
Yeah.
key. That's why, I value what you're doing so much, and that your position in your company is to really cater to the creative flexibility side of it, and to always keep an open mind, because if you don't have that, you're toast. The last thing
Yeah.
you need
Yeah.
is to have doors slammed in your face. You need opportunities to be open, and that's what I'm exploring. So I appreciate
Yeah.
what you're doing and how you're doing it. What would
Yeah.
be
It almost wasn't intentional, honestly, Guy. It was like it was just pursuing solutions for just being in the business for so long and it ended up this way. It wasn't that I said I want to do everything. It just kind of happened that way. But yeah,
I'm glad
it's
I'm
nice to
glad it did, man. We
nice
need
to
we
have.
need more of you in the world.
Yeah, thanks.
So what would you say to tell us, give us some stories here. Like, what's the hairiest deal you've ever done? Like, what's the one, like top of the books,
Uh,
like you guys talk about in your office all the time, about that one deal that was
uh,
just super hairy, super crazy, whether it went good or it didn't go good. Like, just, tell us a story on that from the lending world.
well, you have there's a few. I guess I can tell. I'm trying to find the worst, the actual most difficult one that we funded. A combination deal, maybe using several tiers of lending to make it work. So I guess I can bring this one up. We had a client that wanted to purchase a property in California, and he didn't qualify tier one, right? And he had a paid off condo, and he didn't qualify tier one. His income wasn't enough, so we look at tier two, and tier two wasn't. We had a solution. We had we have a program where it allows you to buy a primary residence with no documentation whatsoever, with 20% down.
Okay.
But what about his down payment? He didn't have a down payment. So we put a lien on his primary residence, which was the condo. gave him the cash, and used that cash a couple days later to close on the other property utilizing the no doc program. So, not many people were able to pull that. The guy would have not been able to purchase that property if it wasn't for him talking to us. But half the time they don't even know because maybe the real estate agent refers them to a lender and we end up handling it for them. So maybe they think everybody can do it. But
Yeah.
sometimes I'm working on these transactions and I'm like, let me just go talk to 10 people and see if anybody can pull this off. But we did like a private money loan for like 3 months, no prepayment penalties, funded it on his condo. And then so tier three private, and then tier two, no ratio, which not many lenders even know that exists,
No
and
kidding.
combine the two. And then once the condo sold, we got our money back on the
Yeah.
private. Then he was going to get an insurance settlement, and he got a settlement, and he paid off that other loan too.
Perfect.
So we ended up putting it through. I mean, that wasn't absolutely the craziest. For most, it would be pretty crazy, but
It's
we've
very
done
creative.
stuff like we have someone's credit scores low. We drop a second mortgage on their house for 100K, pay off the credit cards, raise the credit score during the transaction of refinancing on another property on the same property to get them their money back on the private side. So again, another tier three, tier two. Um, but I'm trying to think on the commercial side, some really hairy ones. I would have loved to have closed that island. That was pretty
Yeah,
hairy.
tell me about
That didn't
that.
work out.
An island's pretty cool. What was going on there? What was the process on getting an island funded, and then why didn't it wind up happening?
Yeah, it was paid off. It was worth like 7 to 8 million. The guy just needed like 2 million, and so
Okay.
it was great. But he was just not strong enough as a borrower
Okay.
to the bank just towards the end. Their board of directors they're like, no, right?
Yeah.
It was also Florida Keys. So there was some insurance issues with them wondering if the thing is going to go underwater eventually.
Yeah.
There was an insurance problems, but we almost got it done. I was kind of like, man, I wish I would have got that done. It would have been nice to put on the resume.
No
I
kidding.
funded an island, but there's a cool deal, pretty complex deal that we're doing in Chicago for 14 million. It's an apartment, really nice one,
Is that the
100
100 unit you
units.
mentioned?
Yeah, and the cool thing about it is the client actually came to us for 2 million because he had a partner that was going to put up 2 million, a pref
Right.
deal to put up 2 million, and that guy got served with divorce papers. So he was like, "I'm out. I can't do this anymore." So he came to us for 2 million. So we had about three outlets to help him with 2 million, but then we have one outlet where we said, "Hey, what about if we?" So the purchase price was in the 11 million range, and we said, "What about if we have a lender that can basically give you the future appreciation value because they were going to come in here and improve the property and it was going to give them more value, right?
Yeah.
And based on that projection, the bank was able to give them the future value of that property. So of 13.8, right?
Okay.
So
Yeah.
with that being said, he was buying it for say 11 something. So he's able to now take that property for 13.8 million with zero out of pocket.
Right.
Right? So he's
Yeah.
acquiring this huge property, and that was just crazy, really, really beneficial for the guy. He no longer needed to bring on someone for 2 million that was going to take equity from the deal from him. It was now he can just do it on his own. The bank finances everything.
Perfect.
Those banks are very difficult to find. Nobody does that to that level. And anyway, that's supposed to yeah. So anyway, that's supposed to close in a few weeks, but
Those are my kind of deals, man. We find those hidden values that unlocks untapped equity. And I mean, if there's
yeah,
any way that you can limit partner involvement or get into deals without the complexity of having to put
yeah,
a partnership together and manage people's money. I mean, those
yeah,
are the ones. And it's it's good to be meeting you, man. It's good to know you. I feel like we're gonna do a lot of
absolutely.
business. It's
Absolutely.
is the world that we're always playing in.
Yeah,
Have you
100%.
ever done any lending out of country, or is it all US based?
Yeah, no, nothing out of country, all US based. I think, let me see. Did we find something somewhere else? No, nowhere. Oh, there was a deal we got out in New Mexico or Mexico, and we can't. It's just we may have an outlet, but it's not something we do. In country though, foreign nationals and stuff like that. Yeah,
Yeah.
we've done foreign national deals from people coming into the US, but nothing outside. Maybe that's the next. next phase, who knows, going global with it, but that's just another animal all on its own, different guidelines, different banks. Like imagine me going into Canada, I'd be like, oh my God, after everything's different.
Yeah.
So,
Yeah.
um,
Yeah, and I can't
but
imagine it. Yeah, like the lending regulations is maybe, not what I'm getting at, but you do lending on US based assets or a US based company, and that company could be
no,
purchasing some.
US based companies doing stuff outside. Yeah, that's definitely, that would be really cool actually, to be able to do that because there are people that want to purchase and then the US based rates and that kind of stuff outside of the
Yeah,
country because you have Mexico where everything's like 9, 10, 11.
that's
Their
right.
funding over there is horrible, right? US kind of has the best rates.
I'm sitting here in Belize, and I think not only can you cannot get any lending as a foreign national. Everything's seller finance or cash here. But
Mhm.
I
Yeah,
believe that what I've heard that even if you are partnered with a resident or a company, I think the best you're going to get here is about 50% loan to value, and the rates are wind up being in between 10 and 15%.
the
So
hard money at 50%. Yeah.
it's hard money. Yeah, exactly.
Yeah,
You're
you
dealing with
can't you
hard
can't
money.
beat the US when it comes to that leveraging, overall. And now when you combine leveraging now with some creative financing where you're leveraging all the way, I mean, you have to know how to use it though. You have to have the right guidance
Absolutely.
to use it properly or else it can put you into some trouble, you have to make sure the projections are accurate, have some padding in there and that kind of stuff. I've seen some people get into deals where it doesn't work out, you know? So,
There's been lots of those lately, and they're all going down
yeah.
right now too from all the cheap lending turning into not so cheap lending. So there's obviously
Yes.
you now on that note, do you see some blood in the water? Like what's your take on the market right now? Because in the world that I'm playing in, we've been watching things for a long time. We know that lending was cheap for a lot of people, rates have changed, refinances are happening. Seems like there's a lot of squirming out there with prices dropping and loans renewing at higher values and higher interest rates. What do you see happening in the market right now?
I see some price reductions on the residential side. Really, I don't have enough of I would say a serving of the entire market to really have experience directly with the loans and that kind of stuff. But as far as what I see, that's what I see. I see it's slowed down. It's not pushing up anymore. It's going the other direction. Everyone's kind of waiting for rates to drop. People that are in their loans now on the residential side and they have such good rates, they don't want to sell.
Yeah,
And people that want to buy, the rates are high and the values are up. It's cheaper to rent, so it's kind of in a stuck position until rates really improve on the at least on the residential side. As far as where it's going, I don't know. I've learned one thing I've learned in 20 years of doing this, and what I've seen in the market is what you think is going to happen and what happens. It's just a guess. There's analytics done. There was a book I read where it talked about 1,000 financial predictions by financial experts versus you talked about 1,000 predictions from financial experts versus the computer picking random predictions, and the financial experts were only 4% more right
no
than
kidding.
the computer randomly selecting 50-50, yes, bad, good, right? So if you're right, you puff your chest out. If you're wrong, there's no accountability. It's like,
Yeah,
oh, okay, I made a mistake. Like Peter Schiff in 2005 or 2006, he predicted the crash.
yeah,
He's known for that in the US. But then that could have just been a guess. I mean, he went all in on the guess and it worked.
yeah.
He was an educated economist. I mean, but now he's been talking about a crash for like 8 years. I'm like, Jesus. I mean, eventually it's going to crash. You're going to talk about it for
Eventually,
20
it's gonna be
years.
right.
Eventually, we'll see the market go down, and you'll be right. But the timing was really good on that last one. but but no, I mean, at
Isn't
the end of the
timing
day, we
everything?
don't know.
Isn't
Like
timing
COVID
everything?
happened, for example, right? COVID happened. I bought my house, the house I'm in right now. I bought it, and I told my wife, man, he's like that, and I had to pay 100,000 over appraised value because it had a yard that I really liked, and the appraiser just couldn't, you know, I mean, they can only give value for so much. 70 palm trees out there. I like trees and that kind of stuff. I'm in the desert, so I like it to be green. I'm like, the appraiser can't give you value for that kind of stuff. Only as a consumer, you go out and see 100 properties. You're like, this is unique. I'll pay extra for it. So it didn't
That's right.
appraise. So I was like, man, I'm at the height of the market. I just bought this. At the height of the market, I paid 100K over appraised value. I was telling my wife, I'm like, I can't believe I'm doing this. We were just, we just had our baby, first one. And I was like, whatever, just buy it. It's a primary residence. Who cares? We got to get a house anyway. That's how I bought it. And then 3 months later, 4 months later, COVID happened. So I'm like, okay, here we go. I've seen my parents go through it in 2005, six. Here it is, half price,
Yeah.
50% off sale, 60% off sale. I just bought it, paid 100 grand over. There it goes, and all the money in the trash. And it went the other way. The property prices went up. Another thing for my wife to tell me, she told me so. And then interest rates went down like you wouldn't believe. I'm like, rates were in the twos,
Yeah, it's crazy.
free money, you know? So it was like, I could have never, I would have thought rates are going to go back. The Las Vegas Strip was shut down.
Yeah. Yeah, like you're toast.
I thought like everything's done. Businesses are going out. I'm like, this is it. Here it is. Here's the crash I've been waiting for. I'm always waiting for a crash also, just given what I've seen with my parents. I always think something's going to blow up behind me.
Absolutely.
But yeah, so that taught me, and that you don't know. So when clients ask me all the time, what do you think rates are going to do? I'm like, I don't know. If I knew what they were going to do, I wouldn't be here right now. I'd hedge something and become a billionaire. And you don't really know. No, it's a guess. But if you're asking me to take a guess, I'll say that rates are going to slowly improve. We're not going to see a huge drop in rates. They're probably going to slowly improve. At the end of the day, in the United States, rates aren't bad right now. Sixes aren't bad. Look at Mexico. They're not bad at all. You just have to find the right deal,
That's it.
right? And if
Yeah,
the,
they're
the
out there.
deal can make sense if the deal can make sense at three, it should make sense at six. I mean, unless your margins are so tight, you have to have it at three to make it work. I mean, was it great? Yes, but it was an extreme situation. Now we're in a normal market. Rates
Yeah.
aren't high; they're just higher than they were. Um, the biggest issue we have is the price. I feel like the prices of houses and stuff like the housing in the U.S. as a whole is a little bit on the inflated side. I feel like there will be an adjustment. Will there be a crash? No, I don't think so. Um, again, I guess, but I think the crash happened here because our lending guidelines are way too loose. I mean, I don't know if you know anything about or you heard anything about that in
Oh yeah.
2007, the crash. I mean, we were doing at the time. I was a tail end of when I first started. I mean, it was ending, but they would take a loan application and the client could put their income on the application. I'm a taxi cab driver. I make 20,000 a month. How much money do you have in the bank? 400,000. The bank would be like, okay,
Here's some money.
here's your loan. Yeah,
Crazy.
like no verification. Like show me your bank statements.
Yeah.
Show me your tax returns, right? Nothing. And yeah, and people were buying homes like left and right. I mean, of course that's going to contribute to a massive, massive, massive crash. Now I mean, some of the guidelines are still a little looser than they should be, especially in the tier one market, but I don't foresee that kind of a crash happening unless we have a massive unemployment situation. Like if unemployment happens, then we'll see another
Big time.
situation. I still don't think it's going to be like it was, but it'll be a bigger adjustment.
Yeah, and
So,
a little bit of a different scenario, but a little bit of the same. I get what you're saying there because in '07, '08, they were giving money away to people who never had the jobs to begin with. And,
yes.
so that was bound to fail. Now it's like, they're probably maybe a little bit looser than they are. People can sort of make their payments, but
Hmm.
if they lose their jobs and can't make those payments, well, then the house cards
It's
come
done.
down.
I
So
can't tell you how many people in this country, the majority, are living paycheck to paycheck.
yeah,
They don't have, it goes back to the leveraging thing. They're leveraging out of their minds. And if they don't have a job for 2 months, it's over. Everything
yeah,
goes belly up. It's very tight. I mean, some of our loans that we do, FHA loans, for example, they go up to 55%. You can have 55% monthly debt off of your gross W-2 income. Okay. So if you make 100K a year, they'll give you, and let's say you make 10,000 a month, they'll allow you to have $5,500 a month in debt, in
no kidding.
payments.
So
Well, if
55%.
you're making 100,000 W-2, what's your net check? Like seven?
Yeah,
So if you
that's
make
crazy.
7,000 and your total liabilities are 5,500, and remember, it's stuff that's on your credit report. So they're not taking into consideration basically utilities, food, other expenses. This is just your house, your car, all the debt that you have to pay, credit cards,
Yeah,
5,500, and you make 100,000 gross, and they'll
crazy.
give you a loan. You're getting a gift for the down payment. You need 2 months of reserves barely in your bank account. So I mean, these are people that are actually getting loans that if they lose their job, they don't have a check for a month, they're
Yeah.
going to default. They're barely making it as is,
Yeah, that's right.
you know? So there is that consumer market. But I think though that's going to affect more anything under 700,000, 600,000.
Yeah.
Um, yeah.
Well, and so you don't
What
see
about on your side? You're in Canada. How's it in Canada? I'm always curious. How's it, employment in Canada? How's the economy? Is it on the up or is it kind of stable? Is it similar to the US? What's happening?
it's I'm not in a ton of the American politics, but I can tell you that Canada, from my own personal perspective, is imploding. Like it's really, I've lost my love for being there as an entrepreneur and a business owner, and it's made it really, really difficult to even want to live there.
Mhm.
The Without getting into politics, the leadership there has been completely horrendous, and we've
Yeah,
just elected in a whole nother term of lunacy,
the
and
same thing.
all their it's all the same thing, and every single thing that they're doing is skyrocketing the costs of
Yeah,
living, skyrocketing the taxes, and they're killing all the incentive for any global investment to ever be there. They're restricting our own resources from serving our own country, and it's burying us alive. So not and it's global. Like, they're pushing away
yeah,
global international investments, which is our job. Like, that is how you want infrastructure, you want investment, you want people to pump money into your economy, you have to attract money. And you know love him or hate him, Trump is doing everything he can to attract money into the economy so
yeah,
that he can get
yeah,
people and jobs and everything flowing. I don't care what you think of him as a person, he's doing what is right as a business, whereas our side seems to be doing everything completely the opposite of that. It's scaring everybody away, and it's putting locks on all of our own personal resources. So
yeah.
it's killing us.
Have you heard of the cost segregation, bonus depreciation in the
I
US?
have, yeah.
Yeah. So the one cool thing that he did is, so let's say you buy a property that's $1 million, right? An investment. Um, what you could do on your first year of taxes where you purchase that property, you could take a 30%, basically, in essence, a rule of thumb is 30%. So you can basically depreciate that for the entire life of that property, you depreciate the entire property year one. So meaning
Okay.
if it's a
On
$1 million property, you could take a $300,000 tax deduction year one. What you're doing is you're depreciating like 28 years of that property in 1 year on your taxes. So like if you had, let's say
for
if you had
residential
$1 million in
property.
it, residential or commercial, yes,
Wow.
investments. So like let's say if you have $1 million home that you just bought as an Airbnb or whatever, right? And let's say your income is $1 million a year. That $1 million home you just bought gave you a $300,000 tax deduction. So now you only have to pay taxes on 700 instead of a million. That just saved you like $90,000 in taxes, right? So there's a lot of people right now buying and doing that, and they're not paying taxes. They're buying homes with zero down, using a second, seller carry second, just for the tax thing. So like
Yeah.
buying three, four, five properties, and I'm like, I'm not paying any taxes, and I'm buying property that's just covering itself. Let it
I
just cover whatever. It's a legacy deal, whatever. And so that's a really, so what Trump did is that was going 100% bonus depreciation. Then they were like next year 80, 60, 40, 20. Trump said now it's back to 100. So now we
Holy.
can take 100% again still. So he helped with that a lot, and that's really making people give him more incentive to buy here in the U.S.
Well,
and
and
tax wise.
it's the exact reason why my focus is in the United States. I mean,
Yeah,
everything is geared towards success and business and deferring taxes and
yeah,
giving you the reason to keep your money there and to keep your time and energy.
yeah,
To answer your
yeah.
question bluntly about what's going on in Canada, they're doing the exact opposite.
Opposite. Yeah,
Every single door that should be open is getting closed and slammed. And they're even the only tax haven, and I'm going to stop my rant after this. The only tax haven that you have in Canada is your principal residence. It's the only income that's your personal home. You don't pay tax on the capital gains of your primary residence. They're
yes.
now even starting to tax, like they're starting to talk about taxing that your home
We
equity
have
here.
that too. After 2 years, you don't pay tax.
Yeah, well, and that's the only thing. So they're even talking about closing that door, and it's scary. It's just super scary.
Seems like they're trying to control the people at the end of the day. They have more control over the people and the population. The more rules they put up, I mean, what are rules for?
Yeah,
Control, right? That's what
100%.
rules are for. So if rules are, they set the rules and now they have control over the population. The problem is, the thing is, the issue is, I mean, people don't leave though. That's the problem. If there was a mass amount of people that said, you know what, I don't like this, we're leaving, and they saw people leaving, they'd stop. But no one leaves. You saw what happened with COVID. They can do whatever they want with us,
Well, they
and no
are.
one
I can
leaves.
tell you
The
right
people
now,
forget about it, but after a certain point, if they push on it hard enough, maybe they'll get to that point,
they are.
you know?
Like, that is what's happening, and you're seeing it a lot. Like,
Yeah,
you're seeing it even in
yeah,
myself and a lot everybody I talk to. Like, I'm not promoting any business there, and we're and even if you do, you're putting your money elsewhere. So they're
yeah,
they're going to feel the repercussions. It's unfortunate. The damage is already done, and it'll be felt
yes,
for generations to come. And it's going to take a
yes.
big Titanic type turn around to even start to correct it. And that's just not going to be in my time horizon. That's why.
Yeah, exactly. We got
That's
to
why.
move. Are you
Why
planning on coming to the US and having a place here, residence here as well? Is that something
it's
that
possible.
crossed your mind?
Yeah, it's possible. I mean, the reality for me, and the whole thing about my ultimate real estate lifestyle, the whole thing for me is to have the flexibility to live with my family wherever I want to live, to be able to travel around, to be able to work remote. Everything I do is remote. Even if I have deals, all over the US, it doesn't matter. They're all managed remotely and there's third party. But, just the simple cost of doing business in the United States and the cost of being there is fractional compared to what a lot of the places are in Canada.
Yeah.
But
You bought something in Belize?
no, I'm just staying here right now. So we're just here for a
Yeah.
couple months, just scoping it out. I Belize is an interesting place for sure. It's got a lot of opportunity. The place I'm in right now is not really where I see myself moving my family, but it's definitely a great place for
Is it
investment.
a crime thing? Is it maybe not, you don't feel like it's safe?
No, not at all. It's actually just the fact that it's an up and coming, like where I'm at in
Yeah.
San Pedro. It's an up and coming, like it's the next sort of Cancun. It's the next tropical
Yeah, yeah.
destination to explode. So it's not a place where you're going to raise your family. It's a place where you come as a destination to enjoy yourself. And there's a lot of there's I would call it maybe a little bit of lack of just sort of family
Yeah, I
and
mean this.
that kind of thing,
Yeah.
right? So, I coach my clients remotely. I do destination retreats throughout the year for hosting events, and we do that in tropical destinations. So that's a big reason
Very
why I'm
cool.
look for investment and to look for locations where we can come and fly and visit, a couple times a year or whatever it is. So that kind of a place, absolutely, I love it here. It's a great
Can you
place.
buy something for like a good house for like 300K? I mean, what's the pricing like over there?
On this particular island, no, you're not really gonna. You can, but I'm on
It's already gone up.
Ambergris Key Island is where San Pedro is, which is it's a big investment place. I mean, the place I'm staying right now is a 4,000 square foot beachfront property. It's got a nice pool, ocean view, beautiful home. Needs a little bit of work, but it's a nice place. But this place is listed right now for 2.2 million US.
Okay.
So it's
Okay.
as far as beachfront properties go, to have the view and have the size and the location that it has compared to other tropical destinations, this place is still very affordable. But in the bigger picture, you're not buying a $300,000-400,000 house and live in beachfront property in Belize.
Yeah.
On the
Yeah.
mainland, can you buy those places? Absolutely. You can get more inland, and there's a very affordable places all throughout there, but I haven't explored much of
Yeah.
that. Been here. It's mostly been on the island.
Nice. How's the water? Is it similar to Turks and Caicos? Is
It's
it nice and blue?
It is. It's phenomenal. I mean, the whole eastern coast now suffers from sargassum. So I don't know if you've heard of that, but there's been a massive
No.
sort of influx. So sargassum is like this huge, like 100 or 800 square kilometer floating seaweed monster that floats around the
Holy crap.
Caribbean. In the last 7 years, it's been
800 square kilometers? Holy moly, dude. That's
I
massive.
might be off on my math, but it's massive. But it's basically been blown in now, so it blows in and it hits all the shorelines of the eastern coast Caribbean. So
Oh,
like
wow.
Mexico and Belize gets hit, and I think even in the Gulf, some in some
We were in
areas.
Cabo for my brother's wedding, and that seaweed was the whole beach. You
That's
were swimming in
sargassum.
seaweed,
That's right.
and
So
it's
that
stuck.
Yes, that's right. So you got to
Yeah.
be. So a lot of
Oh,
people are getting away from the East Coast now, and they're trying to get more like Western facing, not on the West Coast, But like on Amber Greasky, like now the attention is starting to move to the other side of the island, which faces the mainland because of that. So it's an issue. It's an issue that the Caribbean in general is dealing with, and
Yeah.
but in general, yes, the water's beautiful. It's a beautiful place out here for sure. So Romik, what makes your so you know we're getting here, we're getting at the end of the hour here, we're getting pretty close to the end. What's an ideal client for you? And we don't have to wrap up. We can talk for another couple hours, but I think you and I got some stuff. You got a party bus coming, so I know we got to.
Anyone that wants to buy real estate, honestly, nationwide, all 50 states, anyone that wants to
Okay,
buy any kind of
residential,
anything in the real estate
commercial,
arena,
any asset.
residential, commercial, any scenario, yeah, any asset class. I mean, there's so many different programs that we have. So yeah, anybody really.
What's
Um,
your describe your best client to me?
it's hard to describe because we have people that buy primary residences that are great. We love them. I would say from a business standpoint, we like obviously to work with people that are buying multiple properties. They come to us, they send us all their documents. We have a file for them. We get a good understanding of what they want to do and what it looks like. So, and then when they come back over and over to do the same thing, we love those because we're able to do the same thing over and over, rinse and repeat, build a relationship over time for years and years with a customer and a client. And I like that. I like to work with someone for a long period of time, build a relationship. I would say
That's
that I like the most. Yeah,
okay. And you
less
do,
transient. The other stuff is a little more transient, which is great, but
yeah. There's
I
both.
like the other. But
You need
yeah,
both. And you do business in all 50 states? Like you can lend
yeah,
anywhere?
yes,
Fantastic. What about
yeah, yeah.
I wanted to
That's
ask I meant to ask you before. Are you familiar with asset-based lending?
absolutely asset depletion is what they call.
Now, when I say asset-based lending, I'm talking about if I got a property at 70 cents on the dollar, that
Uh huh.
asset-based lending would step in and give 100% financing on it because I've got the buffer in there.
Oh yeah. Okay, I see.
Are
Like
we talking the same thing?
with zero down. You
Yep.
mean? Okay. Hey, hey. Here's the birthday boy right here. There he is.
Hey, how you doing? Happy birthday, man. Happy
He
birthday.
can't
I
hear
heard
you because I'm in my thing. Let me. I gotta take these off. But he says happy birthday.
yeah.
All
Tell him to enjoy the
right.
party
So
bus.
yeah. Well, yeah. It says enjoy the party bus. Nice haircut. All right. Cool. So yeah. In essence, so you're saying with zero down, just based off the equity to lend
Yep.
on that?
Based on the value alone, if we hit a certain
Yes.
threshold, certain asset-based lenders will fund 100% of the deal.
Yes. Yes. We have it where they go off the appraised value instead of the purchase price.
That's right.
Yeah.
Okay.
Yeah. We can put that together.
Awesome.
Yeah.
And hospitality, you do hospitality as well, like hotels?
Yes. We can.
Awesome.
The commercial side is vast. I love it.
I love it too, man. That's where you really get to play in the sandbox. Things get
Yes.
exciting.
Yes. Yes. Yes.
Okay, so awesome, man. Like, hey, you've been phenomenal. We spent a good hour talking about this. I think our
Yes.
viewers have got a really, really solid understanding of who
Yeah.
you are, what your business entails. I mean,
I'm glad.
when it comes to brokers and lending and financing, man, it's really, really hard to find someone like yourself that, there is no box. And I love
Where
that.
do
So
these white hairs come from, McGee?
that's
That's where it's from.
I think we stress in different ways, my man, but we both got it going on.
Yeah, no, absolutely. Absolutely. That's will definitely no, I appreciate you having me on this. Yeah, I really appreciate you reaching out. It's my first podcast I've ever been on, so it's kind of cool.
That's awesome.
um, so yeah, I appreciate you. And yeah, if you need anything, let us know. I'd love to help you guys with anything and answer any questions. So
Well, I can tell you 100%. This was the first of many conversations you and I are going to have. So I got lot. This was good information. I was being a little selfish talking about some of the things that I've got going on personally, and in the
no,
business.
yeah,
But obviously, our viewers are going to
yeah,
find a lot of value out of it as well because it's applicable to
yes,
everybody.
great,
And anything to help spread the word to get good business and good people flowing is what I'm about. And
absolutely.
so what's the best way for people to reach out to you and your team? Like what's the best way for them to get a hold of you? Who do they contact?
My phone number is seven. I can just 702-420-0655. So just my cell number. We go direct, and then I'll push to the team, and then we usually open up a group message in chats. That's
Perfect.
how we operate the best, or email. Romik at lending. You got my email, Romik at
Yeah,
lendingarena.com.
we'll put links to your company in there for sure. And so,
Yeah,
yep,
yeah,
that's fantastic, man. Well, hey,
absolutely.
look, that's it's been phenomenal, man. So look, I really, really, really appreciate it, man. You're a good dude. I'm really proud of you and your business and what you're doing in the space. And I'll
Thank you,
be
man. Thank you.
sending you some info. I'll reach out as soon as we're done this, and I'll throw a couple deals at you that I know my team's working on, and we'll go from there.
Awesome.
But hey,
Awesome.
buddy,
If
it
I don't
was
speak to you, have a happy holidays, man. Enjoy Belize.
yeah, that's awesome. And just hang on for 1 second here, and we'll wrap it up as soon as I close this down. But you take care. I
Sure.
hope everybody enjoyed this episode. And any lending needs, Romik's got you covered. Go his way in the United States. It sounds like he's got all your bases covered. I couldn't tell you how valuable it is to have someone like him on your team. Even though we haven't done business, I can already tell there's a valuable asset to have in your pocket. So you guys take care out there, and stay tuned for the next episode. Bye for now.